Dollar index H4 time frame. In last video I told you to sell on 105 level. That was our key horizontal resistance and price did vertical sharp correction exactly from that level. And this is your counter trend correction after correction, and because this week after FOMC, because of SEP, we will get crystal clear answer, because soon new quarter, new month will start and new money will come for second quarter. So that trend will be one way, either up or down. Since Friday closing of gold, say the market is expecting 25 basis point rate cut this week, but I do not expect that and still think they can pause interest rate. And if that thing happens, long term dollar is bearish, it will break this low, but on official announcement of rate pause, dollar can stay sideways. And since there was no video on dollar index last week, so when this top was made updated in Telegram channel, that day dollar index made top, and this can be your WXY Z wave counting. This is same like 1345 wave, but only difference is that wave Y test high of wave W. So right now this 105 level is our key horizontal resistance, and below that level it is bearish, and price will break this previous low and it will make new lower low. And from this top you can call it wave A, correction wave B, and right now we are in wave C. And for new fresh entry, wait for clear breakout of this last low. Then when it retests that level, then you can sell dollar. Or if dollar goes up breaking 105, then next resistance will be 107. But for that we need market panic, and to trigger that panic, Fed need to do 25 basis point rate cut this week, and to verify that thing, dollar must go up in vertical line and SP 500 must drop in vertical line, and that market crash will not stop until new month start, but trigger will be rate cut from Fed this week. And logic behind this is dollar is a reserve currency, so investor will sell everything and they will buy dollar. But that panic button on and off depends on Fed word, what he said in speech. And if he repeats things are under control, then hard landing is coming, deep recession is coming. First they will cut interest rate, that is bearish for dollar. Then in the end they will start QE monetary policy like March 2020. There will be $1 trillion. Then dollar will go into multi-year bear market. And if you see daily time frame, the possibility of head and shoulder chart pattern is working great. You can say it neckline, your left shoulder, right shoulder, and now price is ready to break neckline. And once neckline break, panic selling will start. So on daily time frame there is no support before 101. On H4 next support can be 102.39. And if Fed press panic button this week, then there is an unofficial rule that all the rich people follow, and it is hidden from ordinary person. And this rule say when central bank panic, investor become greedy. So if that thing happen, sell dollar on 107 or above that level. But it is too early. That thing and recession trade are coming in third and fourth quarter. But that is too early to that market event. Wait for start of second quarter and you will see this thing in third quarter, because aggressive rate cut is coming and it will start in second quarter and there will be aggressive rate cut in third quarter. And if we go much higher time frame, then this is your weekly time frame. So this trend in Fed monetary policy cycle, rate cut, then QE monetary policy, and before that rate pause. Because after rate hike they are skipping two step, pause and cut, and they are going directly to QE. And use your mind, they are doing all of this thing to control inflation. If they really skip these two things and start QE monetary policy, then don't you think inflation will go above 10% within next 6 months? There is a good chance that Fed will be hawkish. And once we get crystal clear answer from Fed, what will be timing for rate cut and what is their target, because my target for rate cut is 2.5%, and once that happen, then we will look for QE monetary policy. So new lower low on dollar index will be 98 level. And same like this wave count, you can see W, X, Y, X, Z. You can say 1, 2, 3, 4, 5 wave count, but you can see high of wave 1 and low of wave 4 are almost near, they are almost retesting. So we cannot use 135 impulsive way, better we use WXYZ alphabet. And since 2009 they are printing money, and last week they again printed $300 billion. And when everyone say that dollar will weak and it will collapse, then why dollar index is going up? That is most important thing. Because if you see dollar index on Wikipedia, then this is inside dollar index. We have euro, we have Japanese yen, we have GBP, we have CAD, we have Swiss franc. And this index does not have gold, they do not have China, they do not have Russia. Dollar is losing its value against gold, against China, against Russia, and dollar index does not have that thing. And you can see biggest thing is euro. That is why euro USD is always an inverted chart of dollar index. So if US government print dollar, then all of this country at the same time printing their currency. And this week they print $300 billion, and you know in July they printed euro, and we know in September 28 they printed pound. So that is why dollar index since 2009 is going up non-stop. And now we see euro USD, then we have this horizontal support level and price almost testing. And once this FOMC meeting complete, we got crystal clear answer for money flow for second quarter. And if they give open invitation for rate cut, because in December they said it will start in 2024, but I am saying same thing since that FOMC meeting. The rate cut will happen this year 2023. Then dollar will weak and all of this currency against dollar will go up. And gold and euro are biggest enemy of dollar. Then it will break one by one all of this resistance. And if you see daily time frame, then first of all we have this horizontal support and resistance, whether it goes up or down. As a price action trader, you have crystal clear level. So this is your trend line. You consider this upper trend line, then this can be possible parallel channel. So after FOMC meeting, if it make sideways correction and retest lower trend line once again, then you can buy, but target will be new higher high. On H4 time frame, this blue level is your key horizontal support. If that support level break, then we can say market panic has been started. So that will be clear sign. But I think that will happen in third quarter, not this time. So if this level survive, then Euro USD is bullish, same like gold. In theory, gold and this pair should go in same direction. Then once upper level break, then buy retest and keep buying until market pricing for rate cut hit 2.5% in Fed watch tool. And if you see USD JPY, because last video was made before Bank of Japan monetary policy decision, you can see it is going down and gave you clear warning that it can come down vertically. And this looks like a ending diagonal chart pattern, and if it complete its final leg, then short term it can go up, then sell again retracement, and your target is new lower low. And if you see daily time frame of USD JPY, then this was your first big drop. This was fourth quarter of last year, and this is your correction, first quarter of this year, and second quarter is about to start just after FOMC meeting, and it will break this low and it will make new lower low. But below 138 level USD JPY is bearish and your target is new lower low. Because if you see monthly time frame, it made top between these last two resistance, and now it is coming down and it is retesting this previous high as a support. And once that support level breaks, then you know one by one it will retest all the support level. So next target is near 120 level. If you see GBPUSD daily time frame, on rate hike these pair were coming down and future is rate cut. On rate cut this pair will go up. So price is making sideways correction between these two previous support and resistance level. It is a strong resistance zone, and you can call it ABC flat correction. And if Fed does not press panic button, then this can be your bottom, and after correction you can expect how high it will go. It will break this previous resistance $1.26476 in first attempt. And for fresh new entry, since it is inside the range, wait for clear breakout, and it will give you one opportunity to buy as breakout retest entry. because these double bottom, you can see second bottom was made at the same time when gold made bottom. And if you see USD CHF, then this was just a correction and now it is coming down. And this spike in dollar, when there was market panic because of bank run, you saw dollar was going up. So this type of panic will happen once again, and next time it will happen in bigger scale, and this will happen in third quarter. But after that $300 QE, that bank run panic has gone. So below that level 94401, this pair is bearish, and after FOMC meeting we can start selling dollar once again. But compared to dollar index, this pair always give clear answer. So back to dollar index H4 time frame. 105 your key horizontal resistance. Below that level dollar is bearish, and your first short term support is 102.98. Once that level breaks, it will start dropping, and final support on H4 time frame is 39.36. That is your last support level on H4, and once that level breaks, it will make new lower low below this last low.